Okay, hi everyone, and welcome to today's webinar. My name is Jeevan Toki, and I'll be your host for today. So today, first of all, a bit of housekeeping about this session and common questions we do get. Like most of BGL's webinars, yes, today is being recording. Yes, you will be able to, you will be sent a link to the recording. So if you do drop out or you want to share the recording with anyone, you will get a copy of that. You will be sent a copy of today's slides. So any of the content which is on the slides, you will receive. We do have some resources and other links there at the end. And if you do have any questions throughout, please enter them there into the Q&A panel. We've got 5 talented BGL team members there ready to answer your questions, and I'll come to the end and do a Q&A session there at the end. Going through, obviously at the start, we ran a poll there to ask who you are. So seeing, it was great to see, I guess 75% of the audience today are accounting firms, some being in specialist divisions, and a lot have limited knowledge there of, I guess, the AML sector. So don't feel, I suppose, threatened by that. There's obviously a lot to learn, and I feel like everyone's learning more and more every day. So this webinar series, in case you missed, I guess what the entire series is about, I just want to point it out. So webinar one, which is today, that is really around the, I suppose, introducing the AML and CTF requirements around Tranche 2, how they work, what the operational impact there is on businesses, some practical takeaways. Webinar two, we've got some special guests. So there's some specialist lawyers that specialize, I guess, really in the AML sector. They're really doing a deeper dive on the policies and the risk assessments and the proceeds and the things. They've worked in the sector for 5+ years, specializing in AML across both Australia and internationally. And they're going to point out a whole bunch of tips and tricks and things like that. Webinar three is more an interview style. We're going to speak. We've actually got a couple of guest speakers who are from accounting firms here in Australia. We're going to just ask some open questions about how they're thinking about their processes, what they're planning, some tips and tricks and things like that. And then the last one is really going to be technology focus. So that is really how BGL can help you with your AML requirements, really there from a tech component, I suppose a tech sense. So an overview for today, as I mentioned, we'll go through what's changing, really then looking, are you captured and how are you captured in terms of the requirements. We'll go through the pre-commencement processes, so what's really required before really 1st of July, in some cases 29th of July, and then I guess what's involved really from the post-commencement. And then I've got some exciting news there at the end. Okay, first section there, what's changed? So let's look at what is all this AML changes and where it's came about. So I guess really these AML requirements, they're sort of introduced and I guess gone through. But I guess from that perspective, and I suppose with the Tranche 2 entities, it's really bringing, I suppose, other industries into play from a government perspective of really some of the things in terms of AML requirements, so in terms of anti-money laundering, counter-terrorist threats, and I guess there's the prolific request, which is around weapons of mass destruction. So I guess really where a lot of these bodies come into, I guess, play is around the services that you offer. So I guess will you, I suppose, look at when you look at, I guess, all these divisions, it's really looking at there's multiple players there within Australia and how are accountants affected. So from an international perspective, and I've just got this sort of brief summary, I'm not going to go through the content there, so don't be overwhelmed, is really Australia was behind where the rest of the world were. So the international, I guess, organization, FATF, was really going to exclude Australia and make Australia high risk if they didn't bring this act into play. The AML Act, in terms of Tranche 2, has been floating around since 2018, and I guess has really just been phased through last year. And I guess this second phase was postponed a couple of times, and now I suppose finally coming to board. So it is something that is happening around the world. So don't feel like it's the Australian government coming into play and the Australian government coming in and threatening just accountants in Australia. This is something which is happening really worldwide. So it's a worldwide initiative. So really, let's now go into a deeper dive around the AML requirements. So I guess when you look at a couple of things, so we're going to go into the detail, but when you look at it, it applies really from the high level there from 1st of July 26. Just because you're an accountant doesn't mean you're automatically required to be, applying these regulations. So where it comes down to is, are you, are you providing a designated services? And we'll go through those services in just a second. If you're applying, an occasional services still count. So if you're only providing a service once or twice a year, you're still captured. Okay, and these requirements still apply to you. So it comes back to with that requirement there of do you provide a designated service? Okay, so let's go into section 2, which is are you captured? So across the board there, I guess looking there are the 9 designated services provided through from AUSTRAC. So I guess given there. So I guess some of the common ones which will really apply to, I guess, the accounting and wider sectors, I should say, are creating and restructuring. So, creating and making changes to companies, trusts, SMSFs, for example. If you provide a service of registered office addresses through to companies here in Australia, if you're providing a service which is acting as a nominee shareholder, for example, there, as you mentioned there, if you get certain equity and debt financing sectors, and there's a whole nuance there which goes involves. If you're, I guess, real estate transactions. So again, a lot of accountants probably aren't, I guess, too involved with this, this particular sector. But if you are preparing Section 52 statements there for, say, commercial property clients and things like that, you are sort of, I guess, captured, I guess, within there. So let's look at a couple of these in, I guess, a little bit more detail. So some of the common ones here, which will apply to, I guess, the sector, is looking at these particular ones here. So are you appointing, I guess, or making changes to a company is that first point. So are you involved in any corpsec services is really at that high level that you're going through and you're making changes to structures and going through. And I guess AUSTRAC is looking there at that particular one there. Are you creating any of those structures or those legal arrangements and providing that as a service? So I guess if you're involved in any creating, as I said, creating any of these structures, making changes to the structures, anything outside of advice to the structures, you will be captured. So let's look at, I guess, a few more examples, practical examples in a little bit more nuances there. So looking there at I guess, a general accountant, it's hard because, again, every accounting business needs to look at this and say, based on what the services that we provide, are we captured? And I guess this is where it comes down to individual basis. Going through into here, if you have a look, that I would say the ones there on the left-hand side are the ones that are captured, and the ones on the right-hand side are if you're not. So if you look at there, if you're just purely maybe providing taxation services as such, you're not involved in any setups, you're not involved in just business side, I guess, advice only, then you are, I guess, not captured. If you're helping set up any companies, you're making changes to companies, you're setting up trusts, SMSF partnerships, you're really there acting as ASIC agent. As I said, there's certain property transactions that are covered. Managing client funds is a big one. So if you're maintaining a trust account where you're actually receiving fees or refunds from ATO, that is not captured. If you're going through and actually managing client funds, that is where you are captured. And I suppose there's a lot of nuances with this, which I haven't got all the detail to go through today, but it's really where you need to read up and go through the ATO website. A common one might be where you're setting up a transaction for your client, but your client is going in and clicking OK. Then the client is, example, super payments, the client is deemed in control. If you're the one setting up the payments, but you're clicking OK, you're deemed in full control of those client funds, so you're captured under the regulation there. So again, there's a lot of nuances there and some finer things, and there's also a lot of gray area as well. So I don't have all the answers there for the gray areas. So it's important there, I guess, going through the AUSTRAC requirements, and I'll cover a bit of that later on, that we can actually go through and see, are you covered? I saw there's a few questions there popping up around ASIC agents. I didn't see the detail there, but ASIC agents, so yeah, you're captured if you do any of those things. So you're using, for example, CAS 360, which is our software. You're making director changes, you're making company changes, shareholder changes, registering new companies, everything like that goes through. As soon as you're doing that, you are captured in terms of those business services there as well. So I guess going through there, you are captured. SMSF administrators, I saw again a couple of questions pop up. If you're purely providing, I guess, the admin service in terms of doing the financials, coordinating an audit, doing etc. that, then no, you're not captured. As soon as again you get onto the other side, which is again the CorpSec services, or again some of those other services that we mentioned before, then yes, you are. If you're providing a service which is setting up a new SMSF, yes, you're captured by this, unfortunately. So again, you have to assess your business. What are the services that you're providing, and are you captured? Okay, again, going into a little more depth. Company formation. So again, questions might pop up. Let's go back to the SMSF administrator, the administrator one. If you are going through and using a third-party service. So for example, a client approaches you, says, I would like to set up a company. You use a third-party website to establish that. So there's a lot of legal document providers out there to create that, pass that through, and you give that back to the client, you are still captured from what I've read and interpreted, and I've seen some feedback there. The client sees you as the one managing the relationship, so you are captured in terms of that. And it's got there, again, there was a warning there from AUSTRAC that outsourcing is not the same as not providing. There is circumstances where are different, so if a client approaches you, says, can you refer me? I need to set up a company? You say, I don't provide this service. I'm going to pass you over to a lawyer that I know. They then engage with a lawyer. There is a potential and a grey area where there's a potential yes or no discussion there. So I'd say advice probably needs to be seek there where it is involved. There is also a lot of grey area around financial advisor. I think it's on my next slide. But a lot of grey area, I would say, in this one around the grey area with financial planners and accountants too. So although financial planners have their own AML requirements, then they may engage an accountant to provide some of the services on behalf of that client. So even though there's a planner is providing the services, there is a lot of grey area there. So there's no categorical yes or no from the outset of saying, yes, you're excluded from doing AML checks. It really depends on the nature of the relationships, what services you're provided, and a lot of information there. So I don't want to in here give a categorical yes or no. It's probably a may. I probably shouldn't have that slide. It's probably a maybe in that case, because there is a lot of grey area in this one as well. Cool. So AUSTRAC, I'm not going to go through now, but AUSTRAC on their website do have, and I would say it's sort of, again, some of it is vague in that sense, but you can actually just go through. It's basically a wizard that you go through, just answer a series of yes or no questions, and it gives you information there at the end, which really says, yes, you are captured, or no, you are not captured. And again, some of the grey area things aren't included in that one there, but you are. AUSTRAC do have a lot of resources, and they do have a lot of, I suppose, a lot of help, and they are ramping up their resources, because I think between now and 1st of July, they're expecting up to 70,000 businesses to register with AUSTRAC. So they have ramped up their staff in order to, I suppose, meet those requirements. But yeah, I would go in and I would sort of ask those questions early to making sure you get the answer back, etc. So again, go onto the AUSTRAC website. We do actually, I think in my slides, which I will send out, there will be a link that is included. So you'll get a copy of that link if you, go into the AUSTRAC website, go through and have a look through with that. Section 3, which is really the pre-commencement requirements. So this is really now you've gone through the process. You said, yes, our business is captured. Okay, so the AML requirements do apply to our business. And then I suppose looking at that, you're going, what do I need to do next? Because obviously there's a bit involved with that. So a couple of things here is this is really the steps that are involved, which are initial before you even look at individual clients. So you need to enroll and register with AUSTRAC. So the registration doesn't open until the end of March. So I think it's the 31st of March. So looking at the details about what's available now for other businesses, I guess with the tranche one requirements, a lot of it is information which you should have on hand pretty easy. The number one thing, I suppose the only thing you may not know is maybe the compliance officer, which you need to appoint, which is step 3 there. So you will need to develop an AML and CTF program tailored to your business. So this is where it's not every accounting firm is going to be different in this sense, because it depends on the services that you have, what you're, with those services, all the particulars, the client base and where they're located, types of clients, types of structures, everything like that. That will be tailored. So that program, I'll go through the detail of what that is in just a second. You need to appoint those roles, which is really step 3. Okay, so there's various roles, and this will, I guess, going through and going through and having a look. And then you need to, last one there, training staff on AML and your CTF program, and that will be an ongoing requirements as we go through. So let's go through and have a look at each of these 4 points here in more detail. Okay, number 1, enroll and register with AUSTRAC. So as I mentioned, I believe this will be an online form as opposed to a PDF form, but this hasn't been released by AUSTRAC yet. But so until we see the details, it's just purely guessing. With the online form, it's really registering business. So think about process of, for example, of registering for as a tax agent or ASIC agent, etc. It's really just registering details there with the governing body. It will just be some key personnel, so you don't have to have all the staff don't need to be notified. You need to give some details about your policies, but I believe it'll be at a high level, contact details and about your registration. Then, like anything, if anything changes, so an example might be at the moment you don't provide a certain service. Let's say you don't provide CorpSec services at all, and if you then your business starts providing those services at a later date, then you will need to enroll then at a later date, or you'll need to, if you've already enrolled but you didn't notify that service, you then just need to update AUSTRAC of that service. So that'll be the registration process, which is probably going to be the easiest piece, I would dare say, in everything that you go through. The next step is really going through and developing and maintaining an AML and CTF program. So again, if you go into the AUSTRAC website, there is on there, they have released last month that you go through and with that toolkit, it provides some guidance there directly to the accounting, I suppose, industry. But with that guidance, just please take note, because in the guidance there with the AUSTRAC, they've said they've designed it really for the smaller end. It's really going through and looking at those with less than 15 staff, those with a low to medium risk, and not those that have multiple office businesses too. So really these policies and stuff will need to be created. With the, I suppose, developing, maintaining the AML and CTF program, this is really an assessment across multiple levels. So you're looking, as seen there on screen, around the 3 different, I suppose, levels of risk that the AUSTRAC does have, but it's looking at the services. So first of all, what are those services you provide? What are the risk of those underlying services? What's involved with those services? How are you potentially even mitigating those risks? You're then going through in those policies. So those policies are really, some of these policies and procedures you may have already, and it's really extending those to include the AUSTRAC requirements. So what happens when you're onboard a client? What happens how do you go through in terms of identifying a risk? What happens when you offboard a client? What happens when a client is deemed at risk? What happens when a client is currently not applicable, but then becomes a client? It's really everything that takes place within the AML program. So as I said, AUSTRAC do provide I would say, a basic template that you can use to tailor. And I suppose that does come through in there. So this is applicable to a firm. For those that belong to potentially, say, national businesses or multi-office firms as well, AUSTRAC do have an option where those multi-office firms can actually register once and have basically a lead office as such, or a lead program, and those the other offices or satellite offices will serve really then as or businesses as a sort of satellite from that lead one as well. So details of that are available there on the AUSTRAC website. I'm not covering the details of that there today as well. Cool. So as I said, in terms of policies and things, I've got some examples there on the screen that it is required that you obviously go through. You're looking at I guess the sections, as you can see there, what your actual AML program it is, what's actually involved in those programs, how you're mitigating risk, what you're actually doing about certain actions, and you'll have a policy there that is really, again, using those words, tailored to your business. Just simply taking a template from somewhere and saying this is what we're doing is not good enough. You need to tailor it to your business. That's the most important thing there. Okay, in terms of the risk assessment, as I mentioned, with all the services, you're kind of looking at each of those services. What risk are those services? How in terms of it, what you're doing to, I guess, mitigate the risk again. Okay, what services, what's the going through each of those and what's going through. The other thing that's, sorry, I didn't have a slide on here, but is actually captures part of that is looking at your entire client base. Are all the clients that you service based in Australia? Are any of those based in another country, for example, over in Asia or Eastern Europe? And are those from I guess AML, I guess, AUSTRAC requirement, or in terms of counter-terrorist risk, are they high-risk countries that they're based in, and other services? So there's examples, I guess it depends on really the service that you're offering and the advice you're offering, and it really stems into those because even your client base forms the overall risk there through to the business as well. So the next part, once you've done all that, so that again, you're like, well, that's a lot of work involved. Next part then, I guess, which forms, it's all being done at once, is really looking at and having these roles and responsibilities. So something to point out, which is a common question, I've seen asked before, what if you're a small practice? You've only got one or two people, or you're sole practitioner. Really, yes, the sole practitioner can wear multiple hats, or one person can wear multiple hats. So yeah, in terms of the governing body, senior manager, compliance officer, that can all be the same person. That's not on there. Obviously, the bigger the business, the better it is to separate that. So looking at let's say a mid-tier accounting firm, they're really looking at the I guess, the governance of the program, the governing bodies, as people like the partners, directors, and the board. And I suppose ultimately it's because they are responsible, as you can see there. You've got a senior manager. So as you can see, the senior manager is the one who approves the policy, I guess, looking at that. In terms of high risk customers, once I guess the onboarding process has gone through, they're the ones that do the final okay, depending on the checks that have taken place. I guess they're looking at the CDD providers, and I guess they're looking at those high risk ones. The compliance officer is really the day-to-day person. So they're the ones that I guess are managing the process to an extent. And I guess if you look at this, this could also be the practice manager. It could be. It really depends on. I don't want to sort of. I suppose it really depends on the structure of your business. I guess how many levels you do have. And you go everything in. You still need to go through and I suppose tick, I guess, who is doing what, and the compliance officer is the one, I guess, signing off the day-to-day stuff. So this is something that goes through, and I guess go through and have a look at it. So there was a question which I think are relevant there. There is a question there which I suppose something I did go through, I didn't cover. I missed the right-hand side there, is once everything is documented, and I saw the question come through, the policy and program needs to be independently reviewed every 3 years. So that is something which will happen. So obviously, going on from this year, it doesn't need to take place to 2029. One thing I meant to look at, and I forgot to, was who can actually be an independent evaluator. I don't know if that can be in another accounting firm, a peer, or it needs to be someone sort of registered as such. So that's something I don't know the details of. But yes, you do need to have the program actually reviewed every 3 years. So I guess more and more of AUSTRAC. So I guess going through and looking at frontline staff. So frontline staff, although I guess they're not the ones who are really signing off on everything, if they're the ones, I guess, engaging with clients, dealing with client files, even outsourcing staff are captured to some level where you need to review each person's position. What I guess what's their relevant AML risk in terms of the data they're dealing with, and then also I guess sort of identify as part of the program what's AML training do they need, if any. So it really depends, I guess, on each person's job and their risk, and it forms an overall, I suppose, program that you need to do. Part of the program for all the staff is they'll need to, on an annual basis, I guess, conduct relevant AML training. So again, this depends, I guess, on the risk profile of the firm, the person's, I guess, knowledge, and I guess their upkeep. So again, that'll be on an individual basis, and I guess what's actually taking place there across the board. So again, next slide here. Obviously, you need to keep a register of some description of who these people are. What it also needs to, of the senior roles, so in terms of the compliance officer, senior manager, and governing body, each of those, from a firm perspective, you need to conduct relevant personal due diligence. So that might be going through and I suppose looking that through, and I suppose there is a template there on the AUSTRAC website as well in terms of making sure I guess they're fit and proper and what training they've had, what training do they require. With your frontline staff, you just need to have them as part of the register. It's not something you actually, the register and details, you don't need to actually submit through to AUSTRAC, but it needs to be on file there within your practice of saying what actually what do you call it? What actually you need to, what training they've done, what's their requirements, what's their position, how that's gone on an annual basis. I'll cover this on a later slide, but any records you have around your program, around your clients and stuff, need to be kept on file for up to 7 years, or so for 7 years. So again, slightly different to some of the other government bodies, but their AUSTRAC requirements are 7 years. I'm just going through. Again, covered a lot there. So now we're looking at really the post-commencement, I guess, obligations. So now that you've now, like, the first step is really going, okay, from a business, what risks do we have? We need to do our policies. We need to train our staff because we need to really kick this thing off, I guess, going forward. And that's something which is will be ongoing, and is something which actually needs to take place. So let's go through and have a look at this and what it takes place here from I suppose really from 1st of July this year, what's going to take place on these post-commencement obligations. So looking through, and I've seen a question pop up already, which the team are answering, which is what happens to my existing clients versus new clients? And yes, there is a difference. So I'll answer that in just a second. But I guess looking overall as part of the program, there is KYC checks that need to be done. And obviously there's an overlap there with the tax practitioners board that those will be done. You're operating KYB and KYE checks. There is a requirement there for AUSTRAC to monitor clients and client transactions for suspicious activity. I'll go through what that means in just a second. Your ongoing training requirements. So there is it doesn't matter whether you're a sole practitioner, whether you've got 5 staff or whether you've got hundreds of staff, depending again that role, there'll be ongoing training and things that need to be done. You'll need to review your policies. And there is a report that needs to be submitted through to AUSTRAC annually. So it won't be everything that's taken place. There'll be again an online form that needs to be done, AUSTRAC, that signifies your annual compliance with them. And as I mentioned, the key things there is all records need to be kept on file for 7 years. So again, onus is put on there. So as I said, there's a lot of onus here put directly there onto accounting firms. So let's go through and have a look at each of those points in a bit of detail. So I want to focus on this one first because quite often this will be the first piece that needs to be done. So let's say a client comes to you, and I've actually got an example of this in just a couple of slides time, but a client comes to you to set up a so they set up a company, or the other side might be provide the corpsec services for their company. So looking at that, you're going, well, first of all, before I actually engage with this client, I'll need to do maybe a company extract. Depending on are they a trading company or not, you'll need to do an ABN lookup. You'll need to look at the beneficial owner of the entity. So it doesn't matter if it's a trust, a company, whatever. You'll need to look at the beneficial, or SMSF. You will need to look at the beneficial ownership to say if anyone's got 25% of voting rights or more than 25% of shares, they've got significant control and they'll be identified and flagged through there. In certain cases, obviously, depending on the nature of the transaction, there might be that source of funds requirements as well, because I guess really that's coming into that counter-terrorism threat. So really then, I guess, your job in accountant, which is, again, some accounting firms are doing parts of this already, but it goes really into a whole new level on steroids. So I guess, first of all, answering a question which a lot have asked already, my existing clients at 1st of July, do I need to perform any initial CDD on them? So the answer is no. All your clients, as at 1st of July, you don't need to perform CDD with them. So they're deemed to be a pre-commencement customer. So you don't need to do anything there. However, if the client comes to you to engage a service with you that you don't already offer them, so let's say, for example, you're offering to a client already, you're managing their business and maybe family trust, for example, individual tax returns, and they approach you and say, hey, I really think it's time I'm going to start an SMSF, or I've been through my planner, I want to start an SMSF. That's really then them starting a new business service with you that is captured. So then they will be captured under the requirements. And the downfall to that is that all their entities from that group will be captured automatically too. So you will have to do the CDD against all of their clients. So again, that's one thing that will come through and have a look. So again, that's where that significant change is there. The SMR one is really, again, AUSTRAC's got a lot of things around this. It's really then if there's some sort of suspicious matter as such. So that could be, I think a lot of the examples I think AUSTRAC given highly unlikely. Example, are they engaging services with you over $10,000 in cash? Are they pure there? I think a lot of that, a lot of the services don't see, that's why they're dealing cash. But there's a lot of those sort of things. Are they doing something? An example to go and say in the SMSF space, a client approaches to you and they want to set up an SMSF. As soon as they do that, they withdraw all the money and they send it off to either a personal account or an offshore bank account. So again, that would be a breach of the SIS Act, number one. Number two, it is a suspicious matter report needs to be filed because it's captured under the AUSTRAC requirements as well. So there are a couple of little things there just, I guess, to point out. Really then, I guess, clients you're providing new services to, etc. So new services to or capture on the CDD requirements. So again, it's an existing client that you're providing a new service to, or a new client's coming to you to provide a service. You will need to then capture under the CDD requirements. So which is customer due diligence. So foreign individuals, I guess this is what you need to establish, I guess, for any of those. So they could be the person that you're engaging with. It could be the directors of the company. It could be for anyone who's a beneficial owner. So you need to look at those 4 requirements that you go through, that you're looking at the ID verification. They are who they said they are. Are they subject to any targeted, financial sanctions? Are they a politically exposed person? Or are they a relative or close associate of a PEP as well? And I guess the question I've seen a lot asked in various other channels with that number 4 is how do we ascertain that, because you're not a detective? And I think from a lot, it's not expecting to that. You're probably just asking that question. Are they associated with that? If they answer no, how far further do you take that? Because you're not a detector on that path. Obviously, in terms of a lot of the ID services, they do return some of these checks as well. That anything they do say in terms of relationship. So again, it's not bulletproof, but you're just doing that to the best of your ability. There is ongoing CDD requirements. So again, depending on the risk level, depending on the person too, you're again, as I mentioned before about the monitoring transactions. If something's changed with that person, let's say they go from being a normal person to a PEP, if they've moved overseas, if something's happened, it might update their risk profile to be high profile as well. So sometimes you've got to ongoing manage this. Again, even as part of this, when we do through our current service, BGL ID, there is a monitoring service that does take place for some of the PEP sanctions and things, and we'll actually send you through updates if it notices anything changes in terms of a data point of view. You've got to look at the ongoing CDD also for your, again, something we're not going to go through in detail here, but I guess, look, if you're managing the business, I guess accounting side as well, is how do you actually monitor that transactions? Is there, like, you got to argue, is there suspicious withdrawals? Is there something which is captured? There's something that flags your attention. So that might be, doesn't matter whether it's a business, trust, or whatever, what filters are you probably going to run over their bank accounts while you're doing their standard accounting as well? And it forms that, overall risk profile that you're doing. ID, this again, I saw this pop up before. Obviously, there's ID verification for the tax practitioners board. What's different? So you can see there on screen. So I guess a lot of the tax practitioners board is really around they are who they say they are, and I guess keeping that sort of verification in terms of that to avoid tax fraud. AML, I guess, takes that really a step, a step further. I guess it's doing the PEP screening, doing the watch list checks. It's going through the ongoing risk monitoring as well. And I guess you're looking at how does it apply to your AML program as well. So it's really doing those initial checks. So if you're doing a check, again, a check for AML purposes, it will cover both. If you're using for individuals, if you are using our BGL ID software, again, it does cater and cover for both, I guess, there as well. Let's look at a practical example for this. So let's say a person, John, comes to you. John's married there to Mary, as you can see. They run a trading company, which then distributes profits through a family trust through to their family. They've also got an SMSF in which both the trust and the super fund have corporate trustees. So not a very, I guess in some ways, not a very uncommon scenario, and not a super complex scenario compared to a lot out there. You've got to really, when you're taking on their new client group, then you've got to go through, and I see that question has popped through, is you've got to check through and pass through, even if you're not providing services for all the entities. Let's say you're only providing a designated service for one of the entities, you've still got to do the relevant, pass-through checks to sort of see, is there anything related or not? So it might be the case of saying, okay, ABC trading, I'm only dealing with that, but even though I'm not doing the corpsec stuff or I'm not doing other stuff, is there any pass-through or risk going through, and how much further do I have to go through? You've got to go through to and have a look at this and go, okay, there is who are the directors for all the corporate trustees? Who are the beneficial owners for all the relevant entities? It might be looking at the beneficiaries, or let's say the trust, and saying, okay, who for a discretionary trust, who are the beneficiaries? And are they, again, do they have any PEP relevance? And are they over 18 or not? So the check, a lot of the checks and places do not need to take place, which is if they're under 18, if they're adult children in a family trust, then yep, that you may, depending on the scenario, you may need to again go through and ID them, or at least assess them from a risk profile. So there's no, again, one size fits all. It really depends on the scenario, what services you're what services you're offering. We can actually go through and I suppose what services you're offering, how far do you go down the rabbit hole, what details there, is there anything that doesn't pass the sniff test? Is there, people going out? So there is a lot happening, in just taking on a new client compared to, say, just onboarding now previously, which might have been just the engagement letter and I guess agreeing to your fee schedule as well. So a lot does come through and, apply to this. So looking through is you may need to look at this and go, what do we do in terms of our onboarding process now? So if you're someone who sends out a form to your clients or new potential clients, prospects to actually fill in prior to this, do you need to add more details into this? Do you need to ask more questions? And it might seem irrelevant or whatever. Do you need to actually ask a lot more questions going forward than what you were previously asking? Going through and asking, relevant more details. So I think actually share this screen. So this, actually not this one. This was just something I mocked up, which might be going through and going, well, for a client group, you might be asking a lot more questions about how many entities they're involved in. You might ask a lot more open questions. You might ask a lot more details around the individuals and any other roles and things that they do hold. You might ask for all the details about all the entities in the group and going through and ownership and things like that. So these are the questions on board before you actually apply your checks going through as well. The beneficial owner tracing becomes maybe a bit more. Previously, you may not have cared who the beneficiaries were. Now you need to go through and, I suppose, assess that. And there is some, there is some certain types of, for example, trusts which are excluded for this. One's testamentary trusts and things like that. There are excluded from this, but there are certain types of trusts which are actually captured as well. But there's a lot of, I suppose, look through from a company perspective, a trust perspective, around, I guess, who's got actual beneficial ownership and is that something there. You can see the description up top. Any natural person who ultimately owns or controls 25% of an entity is deemed to be a beneficial owner. So again, you need to sort of capture those and form part of your, I guess, really risk profile there for the group. I saw a question there, was probably relevant. In a discretionary trust, who constitutes a beneficiary? Yes, so there was I think there was some guidance I saw around this. So please don't quote me as me being absolutely expert on that. But there was cases of going, potentially you could look at the deed to say who are the named beneficiaries. You might need to look at it said you potentially might need to look at the tax returns of the last 3 years to say anyone who's received a distribution in the last 3 years versus those that are named beneficiaries, especially in the case of a family trust as well. But I think AUSTRAC has some parts around that. And so there's a lot of gray areas, a lot of nuances here. I'm not an absolute expert in, AML, but there is a lot going on there. So all very, very valid questions, which we need a lot more answers and things like that too. If you do have any questions for anyone out there too, put them in the Q&A. If we can't answer, we'll go away and try and find an answer for you as well. And we might obviously distribute that Q&A to all attendees today going through as well. So we've done all these checks. The end part now is looking at the overall risk profile here for the group. So in this case, you're looking at the group and you're going, okay, what are the services I'm doing? I'm looking at my tick and flick exercise and saying, what's the overall risk profile there for the group? And as you can see for this one, I've deemed it to be medium because there's multiple entities. There is a layered structure, even though it's a standard business. So I just deemed it to be medium. So I'm going to go through and do this medium. So I deem it as medium risk. So there might be additional checks that I do in comparison to those I've deemed in a similar, circumstance to be a low risk one. I guess looking through there. So going through with with a bit more context. So for individuals, you do need to perform obviously that KYC for all the relevant individuals that you deem you need to identify their identity and say who they are. It might be, again, there might be not all, but there might be certain ones that you say, okay, we want to do the PEP and sanction screening as well. So we want to do that for maybe the main directors, but not the rest. And obviously children and beneficiaries, you need to at least record them in your register, but you don't need to perform CDD on them and go through that check. KYB, so looking at the KYB and KYE in terms of both, I guess looking through, again, you're engaging a new client. This is a new client we're talking about. You might need to turn a company extract to, again, have that verification. And that might be for the three companies in this example. You might need to cite and review the trust deed. Is there anything that has red flags or higher risk or anything within the deed? Does it actually, even things such as the appointer, does it have something which is out of the normal, which again poses another structure and look at. Things such as ABN lookups, which again, just they are who they are, and ISO is super fun lookup. I guess going through that as well. Beneficial owner, going into more, because this post is more around beneficial owner and some of the checks that need to be done in that group. Apart from actually tracing it, some of the things that it depends on the circumstances, some of the questions that might need to be asked are, and this is very similar to what you see when you're filling in forms with a bank, for example, is the source of funds and the source of wealth. And is that plausible? So again, that might be just asking a question to those clients about that. They need to answer it. You need to say, okay, is that plausible? Yes or no. Again, red flags or something may trigger more questions that you need to ask, otherwise, or evidence that you require. Otherwise, you might be, yep, I'm satisfied with that answer. Obviously, the risk assessment that you complete goes on to that overall group and needs to be actually registered. An SMSF, particular one, you might need to look, if it's an existing SMSF, you might want to cite the last year's financials first to actually at least sort of go say, again, is there anything from a risk profile that says I shouldn't take on this new client as we go through? Talking about beneficial owners, this is related but not related in the same thing. I just wanted to flag this going through. So Treasury last year also released a statement, so it's not passed legislation yet, saying that the federal government wants to have really a beneficial ownership register, which it looks likely that it will extend like I said, I suppose extend past ASIC's registers. So I can't remember actually if it's going to be part of ASIC or ABR, but it'll extend registers. So there's a lot of entities there. So especially, around companies that where potentially the beneficial owner is not registered with ASIC, which is, in the main case, they want to see that. Where in the case of trust, they may want to have additional details are recorded, and that'll be those that are deemed as a beneficial owner, going back to that 25% threshold again. So there may be some more requirements in terms of government registration about beneficial owners in the future. That this is not legislation yet, but I just wanted to flag that. If you go through and have a look, then that's is what it is according. As I mentioned, I think a lot of what happens if there's a suspicious matter that you deem they're part of AUSTRAC, so that might be on not who they claim to be, or you think there's linked or whatever to criminal activity. There is a report that needs to be submitted through to AUSTRAC. If there's physical currency transactions, so that's when they're talking about cash, valued at more than $10,000. An example I saw, I don't know how likely, I think very unlikely, but a client comes to you and pays you cash for your services, or pays you cash of more than $10,000 that they want to put into your integrated account to pay to the ATO. Again, it might be something that you just need to report. Doesn't mean there's anything dodgy, just needs to be reported. Cross-border movements, things like that. There is, as I mentioned before, an annual compliance report that needs to be submitted through to AUSTRAC for the actual firm. So that's not really submitting through details of the clients and details of particulars and things like that. It's really about your program and how it's going. The registers and things like that that do form part of your program are all kept on file with yourself. So that needs to be come through. And obviously, I'm assuming like most government organizations that it's going to go through. So this is where it's adding a hell of a lot of work. I've said, I don't know the answer, that I can't answer this question for you, but I've seen a lot of, I guess, commentary and questions asked there. So actually, I just saw a question pop up before in the chat. Things like that is like, wow, this is a lot of work. Do I now charge for onboarding? Do I now charge a fee for onboarding a new clients, or do I wear that cost? And whilst as BGL being a software provider, we can't answer that question. It seems like this will be, I think there's a lot of changes coming here where this will become the norm. That is, there is a lot of work. We might have to actually charge for onboarding, or we will, if they're successful, we might charge them, things like that too. So there is a lot that is I suppose, up in the air within the actual accounting industry, I should say there as well. On an ongoing basis there with your, I guess, AML policy. So that is ongoing. You need to update that at least, sort of annually, I guess, or review it, see if there's any changes, or go through, etc. I can see there's a question there about the annual reporting to AUSTRAC. Looking at the tranche one, I don't know at this stage, but looking at the tranche one requirements, I don't think it's that onerous. So I think it's really just a summary form, as you mentioned there. The summary form is really going through and I think providing details about how you comply and what's potentially changed from the year before, etc. like that. So I don't think it's actually that onerous, and I suppose we will have hopefully a solution if you are using us for that as well. There is ongoing policy monitoring as well. One of the things around AUSTRAC compliance too is it can be outsourced. So let's say you say from your point of view, this is too high risk for me, or this client's too high risk, or something's taking place. The actual AUSTRAC compliance, you can actually outsource to, say, a legal firm or a third-party provider to actually provide either all of the AUSTRAC compliance for your firm, or part of it too. So I'm not saying you need to do that, but I'm saying that is something which is allowed. It's not saying, hey, the AUSTRAC compliance needs to be done 100% by someone within the practice, or we don't have the time for this, or we don't have the expertise, or we don't want to do it. So there is you do legally have the option there to outsource it, and AUSTRAC, even on their website, have a lot of materials there of what things that you need to go through and actually go through there. I guess with I suppose with a lot of the requirements, I suppose the question there too, for the compliance report, that's done every year. I think after the end of Feb, so I think it's due in March. Just so everyone knows with that. Then for the going back for the actual SMRs and TTRs, I believe you've got 28 days from when they occur, but again, I need to double check that one as well. Okay, I've clarified this a few times. I want to still clarify any of the records, any of the things that do take place. You need to keep records, regardless of what form that's in. You need to keep records there for at least 7 years, I should say. I need to refrain that. At least 7 years. So just be a reminder of what actually takes place. Those records, are available, etc. So, it is something which I think, unless it's a serious case, AUSTRAC may not ask for it, but if something does happen, you will be asked to provide that in certain circumstances, and this could even, as I said, for a former client. So as we can see, there's a lot of work there into that. So I guess some of you have seen this for the first time, might be saying, "What the? How are we going to do all this?" And all going through. Obviously, from a technology provider, BGL, we've seen this. We launched BGID a couple of years ago, but we say, wait a minute, there's a lot more to do that. So we are actually moving a lot of those functions, I guess, out into a new product, which we will probably cover in webinar 4. So I should point that out. So stay up for that web 4. So then this end-to-end process. So it is being looked at the moment. I can see a question popped up. What dates? I can't give that date yet because we're actively working on it. It's not finished, but as soon as it's ready, we want to get it in your hands, so that you can have all your documents in one place. You can have your policies there. We want to do things so we can integrate, for example, with XPM and practice management systems, and you can use it for your non-BGL clients as such. Even if someone's there, I guess in this webinar now, you're using one of our competitors' products, or you're not using a BGL product at all and you want to use their system, we want to make that available as well, which is why we're pushing into a product by itself. It will obviously, if you are using CAS 360, Simple Fund 360, or other products that we have, it will integrate directly, and there will be that link in between. So with those records, you will need to go through, and I suppose, with those records, we will have more details available there in webinar 4, and we will go through, I guess, in much more detail of what that looks like. So I wanted to get the focus of today purely on what are the changes as we went through. So we've now completed that. So we've completed the series, I suppose, sorry, the first webinar of the series. So we're going to go. So the next three webinars I mentioned, the second webinar, if you weren't here at the start of the session, the second webinar is we do have some AML lawyers who are experts in this field to then go through the more detailed questions. And some of the questions that our team might not be able to answer, they might have the answers for as well. So they will go through and provide that. If you have not enrolled for the other webinars, you will be sent an email post-webinar with the links for that. So don't worry if you haven't also registered there. We want to also for how the firm's prepared. Our CEO Daniel has very kindly offered to do a Q&A type session where he's actually interviewing accounting firms, and I suppose what the actual process is, what's best practice, things like that going out. In the last session, details will change. I haven't updated the details of that session there. We will have that, and we want to hopefully have it there well and truly. If it's not all, it'll be at least enough for you at least do the program by 1st of July. That is our intention, what we're aiming for now. So again, once we have details available, once we have the ability for you to jump on board, we want you to be there using it. So we will provide that through. There's a whole bunch of resources. There you go, including the registration this will be part of the probably part of the email, part of everything. But I've provided some resources and links there going through. As you can see there, I suppose some AUSTRAC links, the guide for accountants, registration, details about our current ID solution, how do you using some of those functions which are available for segments there within CAS 360 already, and things like that. So I will come through and so these will all be sent to everyone. But yes, I will. I suppose the intention is, yes, the software will be. This, I know that webinar, I saw the question above, 26th of May is a while away. Yes, we know that. But we're hopefully, once we've got something to, I suppose, get you using before this, the good news is that everyone who attended today's webinar will be the first to know about it. So going out there, we'll be getting it in your hands as soon as possible. If you missed the start of today's session, go and rehash of today's. Yes, it is being recorded. You'll be sent a link of today's recording because I covered a lot there and very fast. You will be sent a copy of today's slides and are going through.